Welcome to BT Podcasts. In this episode, find out where the opportunities in the small cap market are, how the market did in the first half of 2024, and what the outlook for the rest of the year will be like. This episode is brought to you by RHB Singapore.
As we approach the halfway mark of 2024, investors are keen to uncover the promising opportunities that lie ahead in the small cap market for the remainder of the dragon year. Which sectors hold the most potential, and how can investors optimize their returns? To shed light on these questions, we turn to RHB's Singapore Small Cap Jewels in 2024, which identifies small cap stock picks worthy of consideration. Welcome to Podcast by the Business Times. I'm your host, Howie Lim, and in this episode, we speak again to Alfie Yeo, Head of Small Mid-Cap Research at RHB Singapore, to walk us through the report. Alfie, thanks for joining us again.
Thanks for having me.
Tell us how the small cap market's been performing so far this year.
Well, the FTSE Straits Times Small Cap Index has lost about 8% this year, while STI has gained about 2% so far. But as far as our small cap coverage is concerned, it has returned 3.2% on the market cap weighted basis. So we probably outperform the market so far with our small cap picks.
That's promising, right? What sort of criteria, though, did you use to select the stock picks that are highlighted, though, in the Singapore Small Cap Jewels 2024? Because, are they reliable, this criteria that you used to pick the stock in, say, predicting how they do in time to come?
Yeah, so we tried to use a sound stock picking process. So as with any stock picking screening process, we look out for companies with good earnings growth potential vis-a-vis their valuation. So our process includes looking at sector cycles and trends, companies positioning within the industry cycle, and market segments or geographies which they serve. So we are generally trying to ascertain if the companies have a strong chance of delivering good earnings growth. Thereafter, we will look at the valuations to see if the current valuations are cheap enough and are able to justify our stock selection. And this is where we get to the part on risk. Of course, we evaluate their risk as well to anticipate what can go wrong. But if the upside potential is greater than the downside risk, as we take a probability on these views, then we can be more confident on the stock pick.
Let's get back to the bad news a little later, risks. What sort of sectors can we look out for, small cap investors that is, that you're keeping an eye on?
We have close to half of our stock picks in both the consumer and tech sectors. In the consumer sector, we believe regional GDP growth will accelerate, at least based on our in-house economist view. So coming out of COVID-19, we continue to see trends such as improving tourist arrivals regionally. Even though Singapore, we open up pretty early, but other countries are still continuing to see a pickup in domestic consumption and tourist arrivals. And within Singapore, we see increased consumption and better tourist arrivals benefiting our consumer picks. Other exciting sector is the tech sector. Demand for tech products soared during COVID-19, and it has led to an overproduction of tech products, especially semiconductor chips. So this oversupply situation was seen in fourth quarter 2022, and throughout the whole of last year, 2023, the market was waiting for the inventory levels within the supply chain to clear. So going into 2024 and beyond, we do expect a ramp up of production soon within the sector. So once this inventory is cleared and a new batch of production is needed to fulfill the demand, this is where the chips are needed and the tech sector will benefit.
I feel like that's a bit of a surprise because the tech sector looked like it was going through a beating and needed to let go of people, etc., but really no surprises for this year's Singapore Small Cap Jewels.
Yes, exactly, because there was a chip oversupply, and that's where production have to cull back. And right now, after a period of lull, and after the chip inventory clears away within the supply chain, this is where production has to pick up. So we are anticipating this in the near future.
See, this is why we need the experts to help us out, So we have to talk about the risks that I mentioned earlier. What are those risks, Alfie, associated with investing in some of these sectors that you've identified for the later half of this year? And then what can we do to, say, mitigate these risks?
Yeah, okay. So there are three key sectors that we are probably looking at in our small cap book. One is the consumer, followed by the tech sector, and the other one is the oil and gas. So for the tech sector, the risks include a delayed recovery, and that could push back the ramp up of production within the sector. For the consumer, the risk is the strength of our domestic consumption demand as well as the tourist demand. So this could both affect the sales and growth prospects of our consumer picks. And in the oil and gas sector, any slowdown in capital equipment spending could affect our stock picks such as Dynamac, and also for Marco Polo Marine, a slowdown in wind farm development that we could see in the region going forward.
Still to come, what is the outlook in small cap for the rest of the year? It's looking all up and up, I'm thinking, but then don't take my word for it. We find out more in a moment with Alfie Yeo from RHB.
And now back to BT Podcasts, brought to you by RHB Singapore.
Thanks for staying with us here on the Business Times podcasts. We're talking to Alfie Yeo of RHB about their Singapore Small Cap Jewels 2024. So, particular trends, Alfie, or developments, let's say, in the economic or geopolitical sphere that we may need to be mindful of when we consider investing, say, in small cap stocks for the rest of this year?
I think I would recommend that investors in small cap identify and write on certain trends. Some of the trends that we have identified include pickup in oil and gas, wind farm development, aging population, continued recovery from COVID-19 regionally, semiconductor chip recovery cycle, shortage of foreign workers dormitory in Singapore. In the oil and gas wind farm development, we have Marco Polo Marine and Dynamac. Marco Polo Marine is exposed to wind farm development regionally, and Dynamac is riding on the increased oil and gas exploration and production of capital expenditure demand. In aging population, we have Econ Healthcare. And for the Dragon Year baby trends, we have recommended Thomson Medical. So in the chip recovery cycle, we do have Franken Grand Venture Tech, UMS, Aztec, which itself is more of a downstream tech player. And lastly, on the consumer side, we have companies like Jumbo riding on tourist recovery, RE&S, which has a high dividend yield, Food Empire is gaining market share in Russia, and CIS market in Europe.
Alfie, what about from the report? Does it differentiate, say, short-term kind of opportunities, or are we always looking long-term and it's a long game when it comes to investing?
As far as we are concerned, we mostly try to take a medium to long-term view. That's because in our fundamental analysis, we look a lot at trends and cycles to ascertain the probability and magnitude of earnings growth. And these events and milestones normally take time, probably a few quarters, for companies to deliver and unfold. This is why our view is medium to long term. So for speculative calls, it may not be short term, are ones like Singpost, where we can expect unlocking of the Singpost Centre and Australia businesses. So they have some value there, but it's just waiting to be unlocked. This will be situational calls, taking a view of an event happening. So things like M&A, special dividend, unlocking of assets in the case of Singpost, this thing will take time, and sometimes the gestation period is long, and sometimes the event happens all of a sudden. So these are what I call speculative calls, maybe short-term and sometimes long-term speculative calls in nature. But as far as our process is concerned, we mostly try to take a medium to long-term view.
What about factors like inflation or interest rates? Interest rates not coming down as quickly as people would like, and then global growth prospects, might they influence the investment outlook for small cap?
In terms of interest rates and inflation, then we will have to look at how much gearing each company has. So for companies that are highly geared with a lot of debt, then we can expect high interest rates to affect them in terms of a higher interest cost. So that would dampen their earnings growth prospects. So every dollar that they earn, they find that they have to pay more in terms of interest expense. So that would dampen their earnings going forward. So if interest rates are high, it's best that we look for companies that are net cash and less highly geared.
Well, thanks so much for your time today, Alfie. We meet back here next year, same time.
Yes, hopefully.
Thanks for your insights.
Thanks for having me.
Alfie Yeo, Head of Small Mid-Cap Research at RHB Singapore. This has been the Business Times Podcasts. I'm Howie Lim. Till next time.
This episode of BT Podcasts was brought to you by RHB Singapore. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.